Hello everybody, you can call me Hunch, and that's Tyrone, and I'm going to drop some alpha today on why Stacks is the most asymmetric smart contract platform play in the space, and why it's better than Cardano, and how Cardano proves this point. Okay, let's dive on in. All right, so if you don't go on Twitter often, there's a lot of hype around Cardano. I think it's a lot of bots. I think it's a lot of nonsense. I think they're trying to pump their own bags. Okay, but there's a chart that came out recently, and they said they had 300 million staked in or total value locked in Cardano, right? ADA. So this is such a new system, DeFi, right? That nobody really, I think a lot of different platforms measured total value locked in different ways, et cetera, et cetera. But whatever, 300 million total value locked. Now, if we go look at Stacks, Stacks is at 600 million, almost 700 million. So double. Now, assuming these are correct charting, right? They could be wrong. I am not saying this. This is directly from Stacks. This is from someone on Twitter who gets a lot of likes, right? So it's possible that these are not, that this is not a good chart and this is measured wrong, right? So you have to take into consideration all that. But let's go in further why I think Cardano is inflated and Stacks will gain market share, right? So if you go look at Stock Twitch, it's like a message board where you get to see where everyone talks about it, right? You have 109,000 people following ADA, okay, at 300 million total value locked, right? So if you did an equation, people following divided by total value locked, it would be a low number, right? And so now let's go to Stacks, 991. And when I made my first alpha video on Stacks on how it was the most asymmetric smart contract platform out there, this was at like 400 or 500, right? Okay, so why do I also think that this is asymmetric, and why people are catching on, and why I think it's going to gain massive market share, right? People are realizing that they are going to have to build in Bitcoin to be successful, right? Because we don't see, us Bitcoiners don't see anything else as money, right? We don't see ETH as money. We don't see Avalanche as money. We don't see Stacks as money. We see it as a platform to use our Bitcoin, right? So what did they do? They announced its core wallet Bitcoin bridge at the AVAX summit, right? So they want to bring that liquidity onto Avalanche, right? Because they're starting to realize that Bitcoiners don't want them, we don't need them, and we'd rather use Stacks or Lightning or whatever. So you have to sway us in some way, right? Now, here's the flabbergasting part, right? If you go to CoinMarketCap and look at Stacks, its market cap is 1.79 billion, okay? Assuming this is all correct, right? There's always a chance these numbers are inflated or wrong or whatever. Now, let's go to Cardano, right? Cardano, 36 billion. Now, if we just do simple math, right? 300 million, 678 million, right? There's some type of disparity. Why? Where is that value coming from, right? And I think that value is coming purely from a marketing standpoint, right? Cardano is older. It's got a guy who goes on YouTube. It's got a lot of bots on Twitter, right? But this is good for us because this is asymmetric, right? Eventually, I hope reality sets in, right? Sometimes not. Sometimes the bad guys win, okay? But you have to look on a probabilistic time frame, right? This is, to me, an outstanding bet, right? 6.78. First of all, you get a higher percentage for stacking your stacks paid in Bitcoin, right? And then this pays like 4.5% from the staking pools I've seen. It pays in ADA, and ADA is not money. And so here's the kicker, right? Avalanche pays you an Avalanche, but we don't want Avalanche. So what do we have here? We have with Stacks a competitive advantage. Now, if you don't know what a competitive advantage is, it's a business term. It basically means there's something that makes you different than everyone else, and it's unstoppable. And it can be very simple, right? Paying interest in Bitcoin. Think about Coca-Cola. The secret recipe of Coca-Cola is the competitive advantage, right? And the brand. That's all it is. The competitive advantage, right? Bitcoin's competitive advantage is it was the first, and it's the brand and decentralization, right? Look for the competitive advantage. Find the asymmetric trade. Now, I'll do another video on the chart of Stacks, but we're having a little bit of a breakout here. Let's see if we can go to it. Yeah, 142. We're looking toasty here. Here, I can like zoom in on this chart. We basically look, what it looks like is oh, if I zoom in too far, you can't see the chart. That's too bad. It looks like a little flag there. I forgot to bring up the trading view thing, but I don't edit my videos. I just kind of talk to you guys. I want you to know what I'm thinking and my thought process. So I think people are going to start catching on to stacks. Not right now. This can take a long time, right? I mean, look at this. There's something going on here, right? And then go here. Like, where there's such an asymmetry here. Like I try constantly. I tweet. I say maybe we're doing this wrong, and people comment on it and tell me no, you've got the right thinking or whatever. I try to convince myself I'm wrong, but there's just too much evidence that there's a competitive advantage and there's an asymmetric bet here. So I'm going to stick with it. I'm going to keep stacking, keep DCing. Not financial advice. You can call me Hunch.